319%, Maya. That's the surge in billion-dollar deals right now. Everyone's panic buying AI like bottled water in a hurricane.
Oh, come on, Nate. You're ignoring the actual money. Brookfield just dropped $3.2 billion on Just Group. Boring British pensions are the real cash cow, not some hyped-up AI wrapper.
Sure, but $438 billion changed hands in Q1. You can't tell me pensions drove a 5-year M&A high.
Give me 2 minutes and I'll prove exactly how they did. The rundown.
I just can't get over these Q1 numbers. $438 billion in completed deals. We are literally at a 5-year high.
And a 155% jump year over year, which makes sense when you look at the debt markets easing up. But the narrative driving it is completely unhinged. Every single pitch deck right now just says AI in 72-point font.
Hey, it's working. We saw a 319% surge in billion-dollar-plus transactions. The scramble for AI capabilities is a total frenzy right now behind the scenes.
But are they actually AI deals, Nate? Because I'm looking at the filings. Half of these companies are just wrapping a basic machine learning algorithm in a shiny new press release to secure a private equity buyout.
You're so cynical. Look, buyers are terrified of being left behind. That fear is what's pricing deals right now.
I prefer to call it reading the footnotes, but fine. If you want something real and tangible, look at Arkland.
Oh, right, they just bought DuPont's Aramids business.
Exactly. They literally own the Kevlar and Nomex brands now, which, honestly, given the level of boardroom anxiety we're hearing about regarding geopolitical volatility and cross-border mega deals, maybe a bulletproof vest brand is the ultimate defensive M&A play.
That's actually funny. I know some deal makers who could use a flak jacket for their next board meeting. Speaking of defensive plays, QXO quietly closed on Kodiak Building Partners. $2.25 billion.
Just a casual $2 billion footprint expansion. We also had FirstSun and First Foundation finalizing their all-stock merger. First Foundation Bank is getting fully integrated into Sunflower Bank.
Bank mergers are back. Nature is healing. But Maya, the one I'm really watching tomorrow is Keurig Dr Pepper. They just announced a massive acquisition of JDE Peet's global coffee and tea consolidation.
Same. I'm waiting for the regulatory filings on that one. The financial structuring is going to be a total maze.
We'll definitely track that tomorrow, along with the tech and healthcare buyouts. But if we're talking about massive swings and complex structures, we have to talk about Brookfield.
$3.2 billion for a UK pension book.
Exactly, adding 700,000 customers overnight. I want to break down exactly how they just bought themselves £30 billion in pension savings. The big one. $438 billion. That is not a typo. First quarter completed deal volume just hit a 5-year high, and honestly, the advisory teams must be exhausted.
Or buying new boats. 155% year-over-year surge is wild. But if you look at the actual transactions, it is not just random deal fever. The big funds are getting extremely targeted.
Exactly, which brings us to the absolute gorilla in the room. Brookfield Wealth Solutions officially swallowing Just Group for $3.2 billion.
Swallowing is definitely the right word. They are ingesting £30 billion in UK pension savings, plus 700,000 new customers.
It is a classic Brookfield flex. They take this massive pool of permanent capital, plug it into their machine, and suddenly their global insurance assets under management are sitting at a cool $180 billion. It is like a Pac-Man strategy, but for retirement funds. You have to admit it is a beautiful play.
Beautiful for who? Exactly? I'm looking at the macroeconomic landscape right now. You are talking about taking on massive UK pension liabilities right as cross-border boardroom anxiety is spiking. Buying a giant book of annuities is not risk-free just because Brookfield put their logo on it.
Oh, come on, it's Brookfield. They eat regulatory complexity for breakfast. Plus, they locked in the deal while financing conditions were actually easing up.
Eased financing conditions definitely help them cross the finish line, I will give you that. But I will bet you a very expensive coffee they spend the next 2 years quietly restructuring that UK portfolio to hedge against the geopolitical volatility.
Make it an espresso and you have a deal. Speaking of expensive things, can we talk about the underlying current driving all this volume? The whispering in the ecosystem right now is entirely about the AI scramble.
Oh, here we go.
I'm serious. We saw a 319% surge in billion-dollar plus transactions. 319. Every tech and healthcare private equity buyout I hear about right now has some AI narrative taped to it.
Taped is exactly the right word. Half these companies are buying up basic data platforms and slapping an AI sticker on the press release just to justify the insane multiple.
Spoken like a true former journalist, but the fear of missing out is real. Boardrooms are terrified. They are buying capabilities because building them takes too long.
I get the buy versus build math. I really do. But when you are paying these premiums, you are pricing in flawless execution, and M&A integrations are never flawless.
Well, flawless or not, the mega deal train is clearly not slowing down anytime soon.
Definitely not. Which means tomorrow we need to dig into the regulatory filings on Keurig Dr Pepper buying JDE Peets. I have some serious questions about how they are structuring that global coffee empire.
Caffeine and aggressive corporate structuring. My two favorite things. Voices. So the analysts are out in full force today, and they are all singing the exact same tune. They are attributing this massive 155% year-over-year surge in Q1 deal value entirely to eased financing and the AI arms race.
I read those notes, and honestly, I think the AI narrative is lazy.
Oh, come on. A 319% spike in billion-dollar plus transactions does not just happen because money got slightly cheaper. The AI scramble is real. Every board is terrified of being left behind.
The boardroom anxiety is real, sure. I hear the same gossip about cross-border panic. But look at the actual tape for this $438 billion quarter. The biggest fish aren't all tech. Brookfield Wealth Solutions just dropped $3.2 billion on Just Group.
Right, the pension play.
Exactly. That is 700,000 customers and £30 billion in pension savings. Pushes Brookfield to roughly $180 billion in global insurance assets. There is zero artificial intelligence in a British pension book.
Okay, fair. But you cannot ignore the private equity commentators. They are right that PE is sweeping in, taking public companies private to strip out the fat before the geopolitical windows close.
I am not ignoring PE. I just hate when the market slaps the AI label on a quarter that includes QXO buying Kodiak Building Partners for $2.25 billion, or Arkland buying DuPont's Kevlar business.
Wait, they bought Kevlar?
Yep, the actual bulletproof vest material, which, given the geopolitical volatility you just mentioned, might be the smartest hedge I have seen all year.
That is actually hilarious. When the macro environment gets tough, you literally buy armor.
Exactly. And speaking of old school assets, tomorrow we need to look at Keurig Dr Pepper swallowing JDE Peets. I am already digging through the early regulatory filings to see how they are actually structuring the debt on that coffee empire.
Coffee and Kevlar, the real fuel of the Q1 surge. Let us see what those Keurig filings actually hide. Spill the tea. I'm hearing absolute panic from the cross-border desks right now.
Good panic or bad panic? Because a 319% surge in billion-dollar plus AI deals tells me everyone is just throwing money at servers and hoping for the best.
Bad panic. The geopolitical volatility is giving boardrooms massive heartburn. You have these partners trying to close mega deals, and suddenly, compliance is asking questions about export controls that nobody knows how to answer.
I mean, they should be asking those questions. I read the risk factors on 3 different AI pitch decks this week, and they read like science fiction. It's pure FOMO.
It's not just FOMO, Maya. It's a land grab. Financing conditions eased up, and Q1 deal value jumped 155% year over year. You either buy the AI capability now, or you're a dinosaur in 12 months.
Oh, come on, Nate. You sound exactly like a managing director trying to justify a 40 times revenue multiple. Buying a tech wrapper doesn't make you a tech company.
Fair, guilty as charged. But speaking of weird corporate mashups, did you see Arkland just bought DuPont's Aramids business?
The Kevlar people?
Yes, they literally bought Kevlar and Nomex. I guess when the M&A market gets this aggressive, you need actual bulletproof vests for the boardroom.
That is a terrible joke. But honestly, I'm more fascinated by the private equity guys quietly taking public companies private, while everyone else is distracted by AI. They're just scooping up boring, cash-flowing assets.
Like Keurig Dr Pepper suddenly deciding they need to own JDE Peet's coffee and soda, the ultimate synergy.
Caffeine consolidation. I actually want to dig into the financial structuring on that Keurig deal. The regulatory filings should hit tomorrow, and I guarantee there's some weird debt maneuvering hidden in the footnotes.
We will pull those filings first thing tomorrow morning, along with whatever healthcare targets the PE firms are circling next. Tomorrow's radar. So tomorrow, keep your eyes on tech and healthcare. The private equity guys are circling like sharks to take these public companies private. The Q1 numbers are just absurd, a 155% jump in deal value year over year.
Driven entirely by FOMO. That 319% surge in billion-dollar deals. That's just everyone terrified they're going to miss the AI boat.
I wouldn't call it just FOMO, Maya. Financing conditions actually eased up. The debt markets are wide open right now.
Open, sure. But look at the cross-border mega deals. Boardrooms are quietly freaking out about geopolitical volatility. The bravado doesn't match the actual risk.
Fair point, which brings us to tomorrow's actual homework. Keurig Dr Pepper buying JDE Peet's.
Yes, I'm waiting for the regulatory filings on that one. The press release was suspiciously light on the financial structuring.
You just want to see how much debt they're loading up to buy more coffee.
I want to see if the math actually works. We'll read the footnotes and let you know tomorrow.